Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday, the 9th of May, 2022, just getting on at 6:10 p.m. Central Time. Bloodbath day. Was there a market not impacted today? I don't think so. Right across the board with the exception, well, I guess you might say bonds and notes got a little bit of a bounce, but the carnage was all over the street. What more can you say? Some people are looking for this to be the blow-off, but it's hard to do that without the VIX getting a settlement over the 36 level. Last time it did it, which was maybe 4 or 5 days ago, you saw how fast the market fell back, and then it came back. But since the VIX is up, it hasn't gotten really again over that 36 level. Keep your eye on that. A lot of traders think that when the VIX gets over 36, it's capitulation. I don't know. In the metal markets, though, what can you do as you're fighting a market with high interest rates, worries about everything, and the dollar staying relatively strong? It's a very difficult headwind. And when you look at gold for the week, you're down 1.5% as of right now. When we take a look at where the market's at on the chart action, look at how you've just been slipping to the pattern of lower highs, lower lows. You get a bounce where you come out of it, but you don't go anywhere, and then you reinstate that pattern. If you take a look at where the support might be, well, the resistance is now the 100-day average. Why? When a market gets under it and plays at it and drops like you did here, you'll often see that you come back up just like you're doing there and challenging it. What's coming now at this point is the 18-day average, the shorter-term average, is marching down in very fast fashion. It's trying to get to that number for another resistance point in the market. So you're loaded with resistance over the market. What about support? Well, the possibility, since the 100-day gave way, is the 200-day is going to be it, and the Bollinger Band. They're not that far apart, 1840.70 and 1824.30. So which one's closer? Obviously, the 200-day average. When you look at momentum, it's embedded. So what do I think the pros are going to do? They're going to sell June gold. As long as you keep the slow stochastic, I can't do it. This one just won't let me. I'm going to reconstruct that chart. But as long as you've got the market with any period where you get 3 days in a row or more, when both the red and the blue, the slow stochastic readings called K and D, are staying under 20, it's embedded, locked in. And in order to lose it, the red line has to close over 21. You're not there, so I think these rallies are going to get hit at that 1885 level if you get up there. In the gold-silver ratio, still losing ground here, as you can see. And when you look at silver, just bearish as can be, fully embedded, reading, much easier to see this one. A lot of resistance up here. It's going to take something major for the silver to be able to clear that anytime soon. I can tell you what the event is. The event is going to be when China finally announces that their zero tolerance policy's gone. Maybe the cases go away, maybe they decide to abandon it, whatever. The market will start looking at the metals and say, wait a minute, does that mean China's going to start buying everything to get the factories going, use up the supplies that are on the ground, blah, blah, blah. That'll be the number that you get up and have to work through. That's the event I'm looking for. In the copper market, you're in the same thing, a complete breakdown. If you take a look, and if you take a look and look at copper when this all happened, this was the Shanghai event. Then Beijing, and the market just went down with that. Go read the newspaper clips, take a look at that. You'll see what the market has done. Are we trending? No, but you look at this bearish crossover, and once you got that, again, I don't know why that does it. This is the version of the charting software. But with this, it's not the software that's doing it, it's my handheld unit. But that's basically what is causing the problem right here. In the palladium market, you saw the UK today put a 35% tariff on platinum and palladium coming in from Russia. So that's going to put pressure on this market. The pullback, you still have a market that is trying. I don't know if it'll let me do it. See, this one doesn't make sense. I can do it on some charts, not the other. But the lows here, 908.80, you can see that. Then we come down on this big break to 912 even. So we've had a pattern of higher lows, higher highs. The market tried the upside, almost got to the 100-day average, thrown back, Interesting battle, that's all I can say. Then in the palladium market, you can see this is pretty hard to get through. Now, when the market does pop through it, this is going to look to me like the potential for a bottom. However, what do you really have? Don't you have sideways action stuck within the Bollinger Bands? It keeps trying the lower side. It keeps getting a lot of bear information. What's the bull information? The bull information will be the ending of the war in Ukraine, obviously, and China's zero tolerance policy. Those will be the numbers that I think can create, or the events that can create the market getting back up to a bounce there. When we come to the dollar index, you still have the bullish embedded reading, which tells me I'd expect a break tonight after today's action. But I think the pros are going to buy the break. I think they'll bail if the red line, which is right now at, what is that number? In the 88, close it under 79, and I think the pros will bail temporarily. Could get back to the 18-day average. But that's if it does that. If it doesn't, you pull back, it's going to get bought, and then the market will try to go up again. The dollar bulls are out, and they're out in force, and why should they give that up? As for the bounce that we're getting in the stock indices after a monstrous decline like that, okay. And if you take a look with where you got in the S&P, you're under the 4,000 level, even with a 10-point bounce. These markets got smashed very bad. Now, I'll give you ideas for trading. ETFs, spiders, futures. A lot of it happens. Now, my spider ETF video, I do cover the metals. SIL, SLV. You're going to get the different GDX, the golds, the different plays, XME. We're going to cover a lot of that to give you ideas as to where you're at in the metal markets, how to best look at them, and what to do. A day like today, if you're trying to be bullish, you know that won't work. Trying to be bearish day like today? Yeah, it did. If you have my update, you know what we've been doing. We've been talking the bear side of these markets. And maybe you participated. I don't know. I can tell you I know what I said, and I've been telling my clients, sell, sell, sell in these type of markets. But I'll give you each morning the fundamentals as they're coming out, technical analysis on the weekends, a weekend view of just weekly charts. Why? Because sometimes the weekly view gets rid of all the noise during the week, and you can see even the bigger picture. I typically put those out on Saturday. But to find out about the whole shooting caboodle, so simple. Take your cursor, just move it up here, and away you go. You can go to our website, www.iraepstein.com as well, and it's under the word research. You owe it to yourself. Take a look at it. You don't have to commit to anything. I'm Ira Epstein. You have a good day.